Good morning, everyone. Today is Tuesday, May the 28th. My name is Anne Marie Band, and this is the Moneyball Morning Report for the Benzinga Pro platform. On the docket today, we have the Case-Shiller Home Price Index, FHFA House Price Index. Both of those are at 9 a.m. Eastern. We have Consumer Confidence at 10, and the Dallas Fed Manufacturing Survey at 10:30. And then we've got all the bill announcements that normally happen on Monday. We have those and the auctions today. So what is this telling us? Well, it's telling us we have a little bit of news that could move the market, but let's just focus on price. What we are seeing is a push up into the open of Thursday's candle, but not a push past. So we've got an alert set here for that push past because it's going to make the shorts leave the market. And the way they leave the market is buying to cover their positions. They're going to buy to close. Okay. If that doesn't happen and we fade, we have the close of Friday, which seems to be about 53.20 and some change, with a little bit of squishiness all the way down to maybe 53.07. What is the formation telling us? Well, what's trend? Up. What's momentum? Up, but waning. So it tells us pullbacks are buy zones, but the pullback could be a little bit deeper, right? It could be. So what are we staring down? We're staring down, can we hold 53.20? If we can hold 53.20 or dip just below it and then move above it, we've got upside pressure into 53.40 and potentially more upside into 53.60. Now, if we lose 53.20 and we bounce and we cannot get above 53.38 or so, we're going to head right back down. You know my supposition is that we are in a broad sideways channel. You know I've got measured moves, and it hit the top of this measured move, almost went to the halfway of that measured move, and now we're sort of, chopping around in a little bit. Pullbacks are still buy zones. They could be deeper. They could come all the way to 52.84. We've got the skirmish that continues in the Middle East. I'm not trying to underlie or diminish by calling it a skirmish. It's not global yet, but everybody's super peeved that Israel is doing what it's doing, and so we could see all kinds of weird things happening. In the end, still not global, still a generalized, localized exchange, and those things tend to resolve without having gigantic impact to the market. All right, let's take a look at the NQ. NQ doing the same sort of thing. Different sort of measured move here, but coming right to the top of our box from Thursday. You guys know that I've drawn these for a very long time, so I'm not changing the size or shape of them. I'm just sort of cloning them up the walk. And here we are at the 19,000 area. Everybody said, hey, listen, yeah, 19,000, we're headed after it. They touched it, only going over 23 points. That's not a lot for the NQ. So my suspicion is pullbacks or buy zones. We're pretty far away from the moving average, and so I would suspect, since upward momentum, upward trend, pullbacks or buy zones, but no big dramatic moves into the upside until we do a little bit of staggering. All right, now NVIDIA continues to run. This thing is so hot when it splits. Everybody who's got a small account with an RIA is going to go, please, can I have some NVIDIA now that it's marketable? And we've seen many stocks split 2, 3, and 4 times doing this very same thing as it runs through its darling stage in the market. And it continually sits in the darling stage. We're not going to bet against it, and it's going to give the NQ some lift. So we have to just see how much lift it gives it. Sorry about my diatribe right there. Here's what we want to look for. This was Thursday's move. Now we're outside of the candle formation in terms of the open and close of the candle, but we're not outside of the entire range of the candle, which still puts us inside the candle. So what does that mean? Pullbacks or buy zones. They could have shallow pullbacks all the way to 18,880, perhaps, right? Let's use 72. Let's create an alert. 1, 2, 3. We don't really care how it meshes. We want it all the way there. Here's the storyboard. First pass dip into here, buyers are going to come in. If we cannot get through this to the downside, we're going to head back up. That's 19,020, and then 19,130, thereabouts, and then here we have our midpoint at 19,250, right? Nice and easy. We're just using Gann formations, not getting super fancy with Fibonacci's. You guys know I love Fibonacci's, but it's just much easier to do this sort of formation as we're staring down. All right, if we lose 872 and we wiggle around in here and we cannot get back above the high of Friday, it's going to tell us that sellers are trying to hold the market back down into the range. And where is that? Anywhere from 800 all the way down to maybe 685. And if we get a little jiggle, it might come down to 627 in that space. But the dips, my friends, are buy zones. The dips are buy zones. So which dip, Henry? The dip with the biggest group of sellers and buyers saying, all right, I'm not going to sell anymore. I'm going to buy from here. That's literally what 685 is telling us. So if it comes down there, it's going to be nice if it bounces to give us a long. Let's just see what the traders do when they come to the line. We just know the line is important. So let's make an alert on that critical line, and let's watch and see what they do. When they've decided to do what they're going to do, we're going to follow along. That's how we do it as intraday traders. Let's take a look at the YM. Good grief, I'm yammering a lot today. Now, YM's coming in. Look at how different the YM looks to the ES and the NQ. This, to me, is very, very interesting. I don't know what to make of it as of yet, but what I do know is the following. It's a mixed bag. What is the trend? Well, overall, it's still buy the dip, but at this juncture, we are selling the bounces. This is Thursday. Now we're at the bottom of Thursday's edge, and we're desperately trying to hold it. If we cannot, right, this line here, 39,069, right? If we can't hold this, we break it, and we do not recover, we've got ourselves a formation that pulls us very likely into the original breakout zone, which feels like 38,936. That's literally, a little bit more than 100 points, which is just about nothing these days. But we've got ourselves potential for further expansion into 761 and then 632, right? 38,632, maybe, right? We'll see. So far, this is a very messy patch, right? And if we look at the highest near-term volume and we lose this ledge, it tells us that everybody that was trying to buy on this candle is now nervous. So they're likely not to add to a long, but to let it fade into its support zones before they pick it up and go, you know what, I'm buying again. So let's go to a weekly and see what we're seeing here. Okay, wow, this looks terrible. Why don't we straighten this out? Oh, we can't we? All right, let's turn it into something like that and see what's happening. Look, double top from several weeks ago, right? Back in March, still not making new highs, right? And so what are we doing? Coming into the breakout zones. Resistance, support, resistance, maybe support. So 39,000 feels like a region they're going to try and hold. Here's the exponential moving average. It's flat with negative momentum. So what does that mean? Well, move potentially below that moving average and then back above it, right? That's what we're looking at in the YM there. Let's take a look at SPY. SPY holding from a weekly perspective, they do want to get up and over this close of 529. I like that 529 area. Above 529, we could really go back to we could hit 535 again. Oh, no, we haven't hit 535 yet. Yeah, 529. Let's, no, too close. Let's draw this one up here. And we'll look at 531 as the region that says, okay, if it does that, then you know what? We're headed to that 535, very likely, or into this zone. What's the trend? Up. What's momentum? Up but waning. What does that mean? Dips or buy zones. Dips could be deeper, so wait for it. What's a great place to potentially buy the dip? Somewhere around 325. That's going to be a very nice zone. Very, very nice zone. Listen, could it crash right through it? Absolutely. What are we supposed to do? We wait until it comes in there, if that's what we're looking for, and we let the traders prove the candles out, and then we get back in. essentially we're still inside of Thursday's formation. And that is the storyboard for the SPY. Let's take a look at the cues. Sorry, I'm not doing oil or gold today, just trying to catch up, right? Just getting back to the Cape, and we'll just see how that goes. All right, so what are we doing here? Same thing, inside of Thursday's entire range, but fighting to hold above the open. This is bullish, but we're extended from this moving average. So what do we want to do? We look for prior areas of heavy congestion, and our expectation is, hey, maybe we'll find some buyers here. 50% of, it's probably this candlestick right here, this Thursday candle, because it's got the highest volume. That's 456. Let's put an alert here at this 456 zone, and it'll tell us, it'll tell us if traders are feeling bullish, right? We've got we got Chicago PMI and personal income and outlays at the end of the week, GDP on Thursday. A lot of news this week could be very, very sideways, all right? And holiday time has kicked in. Everybody's up at their big fancy Hamptons and wherever they want to go. And we're going to see diminished volume, okay? So 456 above here. If we get up above the 460-ish zone, we're going to have a nice punch out, but it's still going to be into resistance. Could we go all the way to 463? Absolutely. We absolutely could. But chances are we're going to slog in this area. Dips or buy zones. If you like shorting, wait for the exhaustion move to the upside and then go from there. All right, everyone. I'll see you on the platforms.